All right, congratulations on finding your dream home. Now, you spend a lot of time viewing, research, and negotiating to get the price that you want and the house that you want. So, however, have you ever checked if you are eligible for the loan? Are you prepared to get ready for the loan application? What are the pitfalls to watch out for? But don't worry, because today we're going to have an expert here, my guest, Kenny Lee, who's an author for the book Tolong Luluskan. He's also an ex-banker and a real estate agent. Thank you, Kenny, for coming to this show.
Hi, thank you so much for inviting me, Ryan.
It's great to have you here today. So let's dive into the first question today. The questions that I want to ask are, what do new house buyers need to know before applying for a house loan?
The first thing that you need to know before applying for house loan is that you need to check your eligibility even before you go for shopping. Most people, after shopping, only check eligibility. That time is a bit too late. Second thing, you need to prepare your documents. Third, check credit rating. Credit rating here will be CRIS and also CITOS.
Oh, CRIS, CITOS. Actually, what's a CRIS and a CITOS?
CRIS and CITOS is actually, they are credit rating agency, but let me explain one by one. Yeah, a lot of people know what is CRIS, but CRIS actually stands for Central Credit Reference Information System. It's actually a database held and managed by the Central Bank, Bank Negara Malaysia, that tracks an individual or company repayment habit. What it means here is that whether you pay your loan on time, whether do you miss any payments, also check whether you have any special attention account. For example, if you did not pay your loans and then you went into a special attention account, especially credit card fees. Let's just say a bank sues you. It also is indicated there. The bank will report this every month, whether you pay or not, to this Bank Negara, and they will update the system accordingly. That is CRIS.
Now, I wonder, CRIS, is it only regulated and only can be seen by the Bank Negara? How about the other banks like, maybe the Harimau Bank or the Octopus Bank, those kind of thing? Can they actually have a look?
The CRIS is actually a personal data. So if the bank cannot just simply have a look just have a look, they have to have a reason for it.
Okay.
Same goes to an individual. You and I can't check your CRIS, you can't check my CRIS, no. So, but if you were to do it yourself, then yes, you can do it. You register with Bank Negara. If you are near the offices for e-CRIS, you can check your CRIS anytime online. If you want to have a AKPK office nearby, AKPK also can help you to print the CRIS. Or you can actually buy them from the CITOS system if you want to buy the CRIS, but that will be a little bit inaccurate.
Okay. All right, Kenny, just now you explained about the CRIS. What about CITOS?
Oh, CITOS is actually a private company. It stands for CITOS Data Systems Remember Berhad. They are a ratings agency whereby they collect personal data, not of repayment habits, but legal status. For example, an individual being sued or you are suing somebody, they have that data. Being sued usually is by banks or telecommunication companies. Yes, if you do not pay your phone bill on time, they can actually, the telecommunication providers can actually put your name in CITOS, and the bank will pick it up this part when you apply for a loan.
So moving on to the next question, how would bank calculate how much can we borrow?
Oh, you mean loan eligibility, right? The bank calculates this using this formula called the debt service ratio. As the name implies, debt service ratio simply means how much of your income, right, is used to service your loans. But if you go to the formula, debt service ratio the formula is DSR. This short form is DSR. DSR is equals to total commitments as per CRIS divided by net income, total net income times 100%. That is the formula. It simply means how much of the percentage of your income a month is used towards servicing your debt. I give you an example. Today, let's just say a client comes with a loan application and his total net income from all the sources is 5,000 ringgit a month. And then, as per CRIS, a commitment of 3,000 ringgit a month. 3,000 divided by 5,000 times 100% will give you this 60%. This 60% ratio means out of 5,000, 60% of his total net income is used to service the installment, all the installments that he has. Okay, all the credit facilities he has. In general, the higher your DSR, the lesser you can borrow. The lower your DSR, the higher you can borrow.
So I got a question. When it comes to this net income, right? The income is not derived from their main career, but it can be maybe part-time job, whereby the gig economy right now is quite popular. People might do part-time Grab, part-time teacher, this and that. Is it possible to get this?
Before we go answer your question, right, we have to understand how the bank derive the net income, this term net income first. What it means by net income here is that if you are an employee, right, it is after all the deduction, EPS or so, EIS, that is the net income the bank takes. And if you are renting out a property, you base on your tenancy agreement. Some banks take 80, some banks take 100. To your question, gig economy, does the bank recognize? The question, right, it depends. Because I've seen some cases where it's not recognized, some is recognized. And remember, banks are very conservative kind of business. So when times are bad, right, this type of incomes are first to go. Unless you are working morning you're working in the office, but at night you're selling insurance. You're selling insurance, and then you are recognized by the body, right? And then you also, insurance companies are big companies. Bank negara recognize all the regulated type. That one maybe they will take in as your net income. But if it's a gig economy, not that easy to recognize. That is what I would like to say.
So the debt service ratio formula which you share with us just now, it will minus out all the debt like car loan, credit card outstanding, is it? And what other loans or anything that they minus out before they calculate the DSR percentage for us?
Total commitment, in the formula, as I mentioned, total commitment is the one that is seen as per your secrets. That means they minus off everything, whatever they can see in the secrets. Then they will calculate.
I see.
Unless you have a special case. I give you an example. This one usually happens for government servant. Their housing loan, right? That's not included in secrets, right?
Yes.
So but it's included in their payslip. So that one, right, we have to take it manually and minus.
What about those employee when they work, and then is there any difference between those of permanent staff or contract staff? Will it affect the loan eligibility?
Yes, there is a difference. There is. It depends on industry also. For example, let's just say you are in permanent industry, a permanent employee in healthcare hospital. Then if you compare to a contract employee in maybe oil and gas or banking, oil and gas will be less stable than banking. So it does affect the ratio. The bank might outright reject, I'm not saying all, outright reject or cut the margin.
Or even the career that the person pick also will affect this sort of loan eligibility.
It's not the career the person picks. It's just how the way the bank actually evaluates credit.
The risks.
This risk comes under the risk in the 5 C's of credit, right? Come under the condition part. Condition here refers to the economic condition, like now economic condition, the pandemic. If let's just say you are in the travel industry, it doesn't matter if you are permanent or contract, it's not easy for you to get loan, correct? It's the same thing. And we go back to a little bit, I think about 2012 or something like that, if I'm not mistaken. I can't recall so far. There's oil crisis, right? Whereby the oil price are all plummeting.
Yeah.
There's one time, I can't remember which year is that, I also actually did some loan application for the oil and gas employees. It's not easy to pass, even though they are permanent. So if permanent also cannot pass, the contract, less chances.
It's even more difficult.
But it's not impossible. That's why I want to say it's not impossible, because there are many banks here you can try.
Awesome. So, after this, I'll be asking Kenny other related questions about loan application, which we may not know. So we'll be right back after the break. All right, and we're back here with Kenny, our expert of the day, to talk about the mortgage loan matters.
Welcome,
So,
welcome
Kenny,
back.
how about people who buys gadget or electronic devices, kitchenware with those usual 0% deal? Will it affect their score? And what other items that people might buy but not aware that is recorded in the secrets or CITOS?
Or you mean like buying iPhone with installment?
Yeah.
That is something I can think of straight away. All the rage now, iPhone, right?
Mm,
So,
it's like very popular lah.
okay, this is how the bank will treat it. If if you are buying anything with installment, including furnitures and of, let's just use an iPhone as example. iPhone 12 is coming. I know a lot of people are excited, right? So let's
Yeah.
just say an iPhone 12 costs 6,000 ringgit. You take a 12-month installment, it's a 0% interest. You will be paying 500 ringgit a month, correct, for the iPhone. So in the eyes of the bank, this is how they will see it. If your credit card limit is at 10,000 ringgit, this whole 6,000 ringgit is your commitment, not 500 ringgit a month.
Mm.
They will count this 6,000 ringgit as your commitment. And this 6,000 ringgit over 10,000, that means you are utilizing about 60% of your total credit card limit. 60%. Some banks may see it as high, some may see it as low, but it depends on the customer profile. If let's just say a customer today have only a credit card limit about 7,000 and a customer use to swipe an iPhone 6,000. 6,000 versus 7,000 is very high. It's more than 70% of utilization of credit card. This client, in the eyes of the bank, will be seen as a high-risk client, and the bank may reject the loan application or, again, reduce the margin.
But even though they pay their maybe iPhone consistently on time, it's still very risky.
Yes, correct. Because the bank will see only the full amount that you swipe. In secrets, they cannot see what is it that you swipe. They can only see credit card and this is how much you swipe.
Mm.
So let's just say you just buy an iPhone. Today you buy an iPhone, you record in the secrets next month, and then next month you go and buy a house. That 6,000 is your utilization for your credit card. It will count in your TSR calculation. But let's just say, Ryan, your iPhone installment only left another 2 months.
Yeah.
Then of course it's about only 1,000 ringgit, right? And that is a lower risk. Because it counts as a lower commitment. Your utilization also drop. So that's how they see it.
When they reach towards the ending of it, then it's safer for them lah, rather than if they start buying at that starting point, it's a very big amount. So it's more difficult lah, is it, for them to get the loan?
Yes, correct.
How about for the audiences out there, how would you recommend them to build their credit score so that banks are looking at them as a good paymaster instead of buying iPhone? What are the things that they can do?
Oh, credit score. Yeah. Back to your question just now, you were asking whether this installment is reflected and how it affects your credit score, right? Basically, what you need to remember is that credit score is very specific to the bank. It's very proprietary. They have their own algorithm in every bank to assess the risk. This is their credit scorecard. Frankly speaking, I myself do not know what is they use, but from my experience, if you want to build a credit score, the first thing you can do, let's just say you're a fresh graduate, get a credit card. That's the easiest, because you got his credit history is also bad because the bank cannot determine whether you can pay or not. Credit score is largely dependent on secrets. So make sure you are paying your loan on time, paying in full. That's it.
So what type of housing loan are there for people to apply in general?
In general, in the market, now they have 3 types of housing loan. 3 types. One is semi-flexi, second is a full flexi, one more is a fixed rate housing loan. As the name implies, we start with the fixed rate housing loan, number 3. The housing loan rate is fixed for throughout the tenure, unlike the normal one where it fluctuates according to the BR base rates. And second one, the full flexi. Full flexi, this one is usually comes with a checkbook. And this current account is linked to your loan account. That means whatever money extra you put in your current account will go towards reducing the interest in your loan account. And this current account, usually they do not give you any extra interest because you are already saving in a loan account. For semi-flexi, this product, right, throughout time become more and more obsolete. You have two separate accounts usually, whereby one is a savings account, one is a loan account, and you need to set up a standing instruction, manual standing instruction. Is normal savings account here that is used to withdraw from your loan account. Most banks, if you want to withdraw for semi-flexi accounts, they have the terms and conditions. Some requires you to write in, some requires you to open a specific savings account or current account with their bank, and then you can withdraw directly online. That is a semi-flexi account.
So based on these three housing loan which you explained to me, what if I'm someone who is eligible to buy a house loan, but I'm not sure which to pick? What would be your recommendation that if among these three, which one should I go for?
If you are first-time buyer and you buy for own stay, for me, I like the flexibility. So I will go for the second one, the full flexi. But if you are an investor, there is an account right out there who actually will help you to reduce your interest as well. Every account reduces interest, but if you are an investor, if you have extra, let's just say cash flow every month from your property, I would recommend you to use the full flexi, even though the interest rate a bit higher. But if you calculate the interest rate a bit higher and also the charges, right, every month this full flexi usually come with a 10 ringgit charge. If you calculate the interest that you save from the cash flow that you receive will be more than the interest that is charged. Why not? You save more money. But if you are actually buying for own stay and you are sure that is the only account that you want to, the only house that you want to stay in, you might as well just get a semi-flexi.
So Kenny, I got a question, a very interesting one. Imagine if I were to buy a house and then I know that particular area which I'm going to buy, but at the same time I submit to different bank bank C, D, E, F, about 4 banks just to check whether am I eligible. Is this okay to do or not?
Yes, of course. Because the reason being we don't know what will happen and we don't want to put all our eggs in one basket. I myself personally will recommend the client to apply about 3 banks at least, just to compare and also in case one doesn't go through.
Okay, so thanks for that, and let's go for a short break before we wrap up the discussion for today. Stay tuned, don't go away. All right, we are back with me, Ryan, your host for Bujang Broke. Last question of the day, Kenny. What will be your advice to our audiences who wants to achieve a high success rate for their loan application?
First, as I mentioned earlier in the show, if you are just graduated and you are working, I would recommend you to get a credit card first so that you can actually build a credit profile. Please pay in full and only use the credit card for something that you can manage. Secondly, as cliche as it may sound, and I'm sure you have heard it many times already, right? You have to increase your knowledge. Spend time doing research, spend time talking to people, especially investors, bankers, lawyers, or people who have bought houses. Ask them their experience. Okay, so these are the 2 things that you can do if you want to increase your success rate in anything, not just getting a loan.
Thank you so much, Kenny. I think today we learned a lot of things from you, and I would love to chat with you more, but we're quite out of time.
Sure.
To those of you who love to know more about what Kenny does, please check out his Facebook called Hikayat Hartanah /Property Stories.
Yeah,
right.
Thanks a lot for the invitation, Ryan. It's been
Most
good chatting
welcome.
up with you.
Thank you so much for joining us too, Kenny.
Yeah.
So we'll see all of you in the next episode to talk about how you can decorate your house beautifully without, breaking the bank and with better cost efficiently. All this is brought to you specially by Bujang Broke, TVS, and we'll see you in the next episode. I'm Ryan. Bye.